Hi everybody and welcome back, and once again we're answering questions from Reddit about UK housing and property taxes, and welcome to the Property and Tax Workshop. I'm David Hannah of Cornerstone Tax, SDLT Refunds, and let's get right into the first question, which ironically isn't a tax one but I think is probably in the minds of a lot of people. What happens in the event of a housing market crash? Now, this person posted on Housing UK Reddit, I am interested to know what the potential impacts would be of a housing market crash. With the house prices jacked up so bleep high, this must surely lead to a huge number of homeowners left with negative equity, right? Would the effect be similar to the 2008 crash or worse? House prices and rental prices cannot increase at the current rate indefinitely, as there simply won't be enough people left who could afford them. And if you take that as it's stated, you can kind of see that this guy's got a point. But let's just deal with the first issue. Is there going to be a housing market crash? I predict there actually won't be a crash in 2022.
Over £2 billion a year is overpaid on stamp duty, with up to a quarter of purchasers paying the wrong amount. From millionaire developers to residential homeowners, anyone may be affected by these errors. Contact us today to see if you have overpaid your stamp duty and owed a refund from HMRC.
And why I predict there won't be a crash is the reason why a lot of the assumptions in this question, whilst perfectly correct, leave out some important factors. So, prices are jacked up high, yeah, they're rising constantly. That's because demand is exceeding supply. Now remember, in the property market, demand comes from people who have cash or mortgage offers available to spend. So it seems to indicate that there's still a reasonable amount of liquidity in the UK property market. This may be the tail end of the wave that we saw with the SDLT holiday, but there may be other factors at play. Now, because of that surge in demand, even with rising interest rates, I don't predict there'll be a crash. The crash of 2008 happened because of a sudden loss of liquidity in the international banking market. And we aren't in that same situation again. Yes, we've had the global pandemic. Yes, we've had massive government spending because of it. We've now got a small war going on in Eastern Europe. And again, government spending has had to be expended on that. All of that tends to jack up interest rates, and with all of the factors associated with the pandemic and the war, we're seeing a surge of inflation. The question has got to be, will the global lending system be able to maintain the liquidity that it lost in 2008? And I think the answer to that simply, yes, it will. Governments are printing money. That's one of the reasons we're getting inflation. But that money is liquidity. So I don't think we're going to see a crash. We're certainly not going to see, as some people have predicted, 20, 30, 50% falls in UK housing. The general global economy at the moment means that our economy is pretty much in lockstep with every other one in the world. So what will be the effects? Well, if we look at what's been going on, we've got house price growth, we've got retail inflation, energy costs are surging. That's going to put up pressure on employers to raise wages. And I believe wages will rise broadly in line with inflation over the next 5-year run, and as a result of which, real spending power will not actually decrease. So what happens if you borrow £100,000 or £200,000 today? Well, if you actually work it out, that fixed figure of £100,000 doesn't rise in line with inflation. So in 5 years' time, 7 years' time, that debt is probably worth half in real terms what it is today. In actual fact, in high inflationary times with relatively low interest rates, and here I would note interest rates are actually below inflation, so they're negative at the moment, it makes sense to borrow, because the value of the debt, or not the value of the debt, the simple real terms money value of that debt is declining. It's being repaid or eroded by inflation, whereas the value of the asset, the house, is actually going up in line or ahead of inflation. It's actually a way to make real returns. Short answer, no, it's not going to be like the 2008 crash. We're not going to be locked into an era of austerity, low interest rates, no wage increases. That simply isn't going to happen. The problem we do have is the rate of demand and supply. And again, if house builders are building and they're oversupplying, it will soften the increase and the appreciation in asset values. But if the number of people wanting to buy houses continues to exceed the supply, then those prices are going to rise. So who are the people that are wanting to buy houses in the UK? As you know, we have an open market. And what that means is that not only are domestic purchasers looking to buy and domestic-based investors, but we have inbound investors, foreign capital coming in. We also have quite a number of people relocating to the UK because of its favourable political or economic climate. We started to see a run 2 years ago of people buying houses to live in who were moving here from Hong Kong and taking their businesses. And because of the tragic events in the Ukraine, we're highly likely to see a large number of people coming to the UK and wishing to remain here, and every one of them will need a house. Initially, they'll rely on the private rental sector, but ultimately, they'll want to buy their own home in a place where they feel safe and secure. And that fundamentally is still the attractiveness of the UK over many other countries in the world. It's not about storing dodgy capital, it's about having a safe place to run to when things go bad in the country you're currently in. Overall, therefore, I expect demand for UK housing to continue to outstrip supply, as a result of which it will push price increases ahead of inflation. And provided wages manage to rise, and I suspect that most employers will have to, the affordability of housing will basically stay in lockstep. What we might expect to see, and we've already seen mutterings about this, is the abolition of affordability tests with the artificially inserted interest rate and a return to more traditional judgment-based lending rather than formula-based lending by the banks. Only time will tell. As it stands, as of today, nobody can predict what might happen in the next 6 weeks, much less the next 6 years. But I'm mildly confident that we're not going to see a repeat of the crash of 2008. Now, if you like this video and you like the content, please click like and subscribe so you can receive more videos like this and on other topics. If you want to contact us about stamp duty or any property related question, please click on the link below to go to our website. And I've been David Hannah, Chairman of Cornerstone SDLT Refunds. Thanks for listening.